first got into Bitcoin, I was 24 years old and I didn't know anything about investing. I was always afraid of picking individual stocks. So I just focused mostly on my 401k and growing that so that eventually when I'm like 65 or whatever, maybe 70 now, I don't even know what the age is, but then I could take out from my 401k. Back then, we were living in the Bay Area. And if you know anything about the Bay Area, it's that it's expensive. So I went along working my first career and started saving up money. But after a while, I started looking at how much I was bringing in, looking at how much I was saving, how much my student loans were, how much housing was, how expensive everything was getting. And I just realized without investing, there's just no way regular people can make it in life. Back in the day when people just had one income come into the household and they were able to buy their house, buy cars, take trips, and still save up for retirement, that's not a reality now for most people. In most households, you have both spouses working and it's still not enough. And the thing is, every year it's getting worse and worse. Housing is getting more expensive as inflation goes up. For me, that was the worst part. Like, is there a future where I'll be able to save up to buy a house, to create that generational wealth for my kids? 401ks and slowly growing your wealth is good. It's a great thing. But I wanted that one thing that was new, so it would have like a greater amount of return for me. Because I felt like I needed something that would exponentially grow my wealth versus just slowly growing my wealth. And that's when I learned about Bitcoin. So when I heard about Bitcoin, I was like, I don't know what this is, but this is new and it could possibly change the world. It could possibly be one of those things that, yes, is worth about 10K right now, and that's a lot. But for me, back then, not knowing anything about investing, I was like, what if it could reach 100K or 200K or a million or whatever? I just felt like it's worth the risk because the alternative, which is not an option for me, the alternative of, oh, just come into work every day and save what I can, whatever taxes hasn't taken out, and then what? Eventually retire at 65. And mind you, that retirement age is going up. By the time it's time for me to retire, it might not even be 65 anymore. It might be 75. You know, and I don't want to be a respiratory therapist until I'm 75. So I could actively invest into this one thing and the returns could be amazing. But of course the downside, which is I could lose a lot of money, it was also there too. Because I was young, I didn't have any kids back then. I went ahead and I did it. But I still felt like I had to take measures to protect myself while I was investing. I went all in on Bitcoin and thankfully it's worked out for me in such a big way, but I did make a lot of mistakes along my investing journey. So I wanted to make this video. Investing in any stock, there's always going to be risks, but there are ways that you can protect yourself from those risks and from losing all of your money, which is something that we definitely do not want. My first tip, and the one that I think is the most important when it comes to investing in Bitcoin, is to not invest more than you are willing to lose. Every time I invest money, I have to think, will I be okay if I lost this money? That's why when I first started investing in Bitcoin, I only put in like $50 a month, $20 a month. I put in what I felt like I could afford to lose. And if that money went to zero, it's like, it's okay. I took a risk, no big deal. It was just $20. I'm not gonna be out in the streets. Really, I put in way less than I could afford. But I was just like, let me see, because I don't know. I'm not trying to lose no money. I don't know if you guys know the story about Amazon. Back in like 1999, the stock for Amazon was a little over $100. All of a sudden by 2002, that's when the dot-com bubble burst, and a lot of these internet companies, their stocks crashed. A lot of people started buying out of Amazon stock. They panicked and they sold. They lost money by selling. But the people who didn't sell, who held on, now Amazon stock is worth over $3,000. Those people did really, really well. They were able to weather the storms and now they're profiting so much off of it. And I'm sure the people who panicked and sold back then, they're kicking themselves. But who knows, maybe some of those people, their entire life savings was in Amazon stock. Maybe they needed that money immediately. And to see it go from $100 a share all the way down to $10 a share, like they're thinking, I don't want to lose all my money. So they pull their money out. But if you had that mindset mindset of this money that I'm investing is not money that I need immediately. It's not all the money I have in the world. Then it's easier for you to hold on and wait for the stock to rebound. And the thing is, just because a stock, it went from being worth $100 now is worth $10, that doesn't mean you've actually lost any money. You only lose money when you sell. So the goal is always buy low and sell high. But a lot of people, they do it the opposite. They buy high and then they sell low because they panic. That's not smart investing. So just to be on the safe side, for me as a new investor, I would just be like, let me just put in my extra money that I would have spent on Starbucks, shopping for clothes, makeup. I wouldn't invest my kids' college fund, my emergency savings. I wouldn't take out my retirement fund and invest. That's just stupid. It's just easier to wait the storm out if you don't put all your eggs into one basket. And that brings us into our next investment strategy, which is to diversify. Listen, I am team Bitcoin for life. I love Bitcoin. I love what it represents. I feel like Bitcoin is how I'm going to be able to build generational wealth for my kids. But no one can predict the future. As much as I love Bitcoin, I believe in it so wholeheartedly, I can't put all of my money into Bitcoin because I'm just gonna be stressed out if it drops even a little bit. And I don't want that. I don't want to be in a position where I'm solely dependent on this one thing doing well, and then God forbid something happens to it, then I'm just out of luck because this thing I was depending on just fell through for me. So for me and my portfolio, the first way that I am diversified is by having an emergency fund. I have about 6 months of my income in a savings account and I don't touch that money. It's for emergencies. Your car breaks down, something happens with the kid, anything that happens where you need a large sum of money at any point, you dip into your emergency fund. And once you dip into your emergency fund, the goal is to build it back up. Number 2, I have my 401k. And with my 401k, money's going into it every paycheck. And within the 401k, you have the option to invest your money into stocks. And for me, because I don't know how to pick individual stocks, I just decided I'm just going to invest that money into a target date fund. A target date fund is a type of mutual fund where it targets a specific time. So for me, that time is the year 2055. So between now and the year 2055, the account managers that are managing that fund will optimize and assess my level of risk the closer I get to that time. So right now, they see that I'm 29 years old, so they'll invest in things that are a little bit riskier because I have more years to recover that money. As the date gets closer to 2055, they'll adopt a more conservative approach and give me more of a lower risk profile. They're basically investing in different companies on my behalf. And that's a really good thing for people who don't really know how to invest. Like, I can't look at a Netflix, an Apple, or Tesla and know how much I should invest and know when I should invest or anything. That I don't know that much about stocks in order to do that. I just go the safer route and just deal with ETFs or mutual funds. There are a lot of YouTube channels that talk about target date funds and ETFs and all that stuff. So I'm not gonna go too in depth into it, but if anyone ever feels like they need deeper explanation into these things, then you can always reach out to me, send me a message, and I will definitely answer to the best of my ability. And then the final thing that I am invested in that you all know is Bitcoin. Majority of my wealth is in Bitcoin just because I believe in it so much. But again, just because I believe in it doesn't mean that I should be dumb and not protect myself just in case. No one knows what's gonna happen in the future, and Bitcoin prices are so volatile. They're going up, they're going down. I believe this is the future. So I'm willing to invest in it heavily because I feel like it's going to pay off. But again, you still have to diversify so you're not up in the middle of the night stressed out if it goes down. For me, because I'm so diversified, whenever Bitcoin goes down, I look at that as an opportunity to buy more at a discount. It's like, oh my God, it dropped 5K. Let me buy more because I know that yes, it's down today, but it won't be down tomorrow. That brings me to my third investment strategy, which is dollar cost averaging. The most that I ever invested in Bitcoin at one time was $1,000. I just had this extra money and I was like, you know what? I want to invest it into Bitcoin. So what I did was I just made the purchase all at one time, which was a big mistake because it was such a huge amount. I was obsessing over my account. Every time the price of Bitcoin dropped, girl, I was stressed. I was having doubts and I was just feeling bad, and I kept having thoughts like, dang, I should have bought today, instead of yesterday. I should have bought 5 days ago. I should have waited if I knew that it was gonna go down. But that's the thing with the market, is you never know what it's going to do. You don't know if it's going to go down or if it's going to go up. I know know people that say, oh no, like I'm not gonna invest in Bitcoin yet until it goes back down to 30K or 10K or whatever. But the thing is, what if Bitcoin never goes down? What if it only goes up? What if this is the new low? You don't know. What dollar cost averaging says is that you basically invest a fixed amount, but you spread it out over time. So instead of investing that $1,000 all at once, I could have spread it out and invested $250 every week for the next 4 weeks. And when you do that, because we don't know how the market is gonna go, you have a higher chance of hitting it when it's low. That might not happen sometimes. You hit it when it's high. But now my current investment strategy when it comes to Bitcoin is put in $100 into Bitcoin every week, no matter whether it's high or whether the price is low. I invest regardless. I don't wait for it to get low in order to invest, because I have missed many opportunities because of that. When Bitcoin got up to 20K, I was like, oh man, let me hold this money that I have, and when it reaches 10K, that's when I'll buy. It never reached 10K again. Now it's teetering above 40K. So if I hadn't been greedy, you know, and I had just kept investing regardless of whether I thought it was high or not, I would be in a better position. It's okay, lesson learned. But now that I know better, I've adopted this new strategy and it's working really well for me. It also helps psychologically, because like I said, when I invested that large sum of money, I was stressed. But if I had just invested that $250 every week, it would have just been on that $250. I feel like the price of Bitcoin is gonna be way higher than it is right now. So let's say I wanna invest at 40K, but suddenly the price goes up to 41K. I'm not gonna say, oh no, it's 41K. No. I need to buy at 40K. So I'm not gonna invest this $250. If I believe in Bitcoin as much as I do believe in Bitcoin, then that little one extra K doesn't matter, especially when I can see Bitcoin going all the way up to 500K. What is that extra 1K? Just go ahead and invest, because there's a chance that it might never get back down to 40K. It might be 43K tomorrow. It might be 45K, it might be 50K. Now you've lost out. So depending on your long-term vision for your investments, what you see Bitcoin doing in the future, it's best to just invest, and it's best to spread out your investment over time. People who employ dollar cost averaging tend to do better over time than people who try to time the market and be like, oh no, the price for sure is gonna go down. You don't know that. Nobody knows that. I don't know that. You don't know that. None of us know it. So do the right thing. That's how I do, but this isn't financial advice, so do what you do. My last investment strategy tip is to set it and forget it. Now, this isn't for everybody. This tip is only for those of us that invest into something and then check it every single minute of every single day. And when the price drops, we're shaking. We are stressed. Our husband can't talk to us that day. We don't want to hear anything from anybody. We're just so focused on all the money that we're losing because the price of Bitcoin dropped by $1. If this is you, and you know yourself, then I would say just invest and then don't check your accounts. I would check my accounts periodically, but to stay up checking your account and obsessing every single minute of every single day is just not good. Psychologically, you start to become emotional about investing, and that's when you start feeling like, oh my God, I should sell before I lose any more money. And that's not good, because that's when you really lose money. So in my mind, I've invested so much money into Bitcoin, and right now it's like 30K. If it ever dropped, at that point it's like, what do you have to lose? You might as well just keep it in there and see if the price won't rebound and do what it needs to do. You don't know for sure if the price will go any lower, but you know for sure that if you take out money while the price is down, you've lost money. So it's like, might as well just keep it in there and just see. But it definitely helps if you just buy it and don't look at it. I'm guilty of this too. The only time I look at my account, like periodically, it's if it's going through one of those moments where the price just surges. And that's because that makes me happy. The price is going up, but when the price is going down, oh man, I log out of my account. I don't like negativity in my life, so I don't look at it at all. If you have better self-control than the rest of us, then definitely check it, because you want to know what's going on with your account at all times. So that's the end of the video, you guys. In conclusion, I feel like everybody should own Bitcoin, and it's a great asset to invest in, especially right now where the technology is now becoming more mainstream. I feel like if you're in doubt that Bitcoin is the future, then I don't know what you're doing. But for the rest of us, that have some kind of foresight. Even while you're investing, even if you believe in it, you still have to protect yourself. You still have to be smart. If you've learned something in this video, then I am happy, and I hope you return for the next video. Please don't forget to like, comment, and subscribe. Let me know what you think about this video. Thank you so much again for watching, and I appreciate you. I hope you have a safe, blessed day. Bye.